so happy to start this conversation. All good to start? Okay. Yeah, so my name is Bella Park, and I'm leading APAC client partnerships in Caladan. And I'm mostly in charge of business development here. And Caladan, we're doing a market making as a service, and also we're also VC. And here, this event is called EthScale. So, and this panel topic is titled L2 Perspectives, the current state of Ethereum scaling, which perfectly aligns with the theme of this event. So happy to moderate this panel. And before we go over to the introduction, I would like to guide our discussion from the user's perspective. Like, I would prefer using the simplest and easiest language. So, and I would like to focus on why and how we should understand each L2. So, shall we give some introduction of all of our each others, starting from here? Yeah. Oh.
Hi everyone, nice to meet you. I'm Ryan, so I lead APAC partnerships for Offchain Labs. Offchain Labs, we're the initial developers of the Arbitrum technology. So Arbitrum is a layer 2 optimistic rollup, focus on working with teams in the ecosystem, building on the public chains, as well as leveraging our Orbit SDK that allows team to build, layer 2s or layer 3 app chains.
Hi, my name is Joshua, and I'm part of Mantle Network. So Mantle is also a layer 2, I think the 4th largest currently in the ecosystem, just behind Arbitrum, Optimism Base. Mantle's right there. I think where we differentiate is that we also have a lot of interesting assets and protocols on the L1 as well. So that allows us to tap into good yield staking products. So we have METH, which is a liquid staking derivative of ETH. So you hold METH, you earn more ETH, and you contribute to the staking. And also with that, you think of that asset as a DeFi playground on the L2. And being able to do more than that in high gas kind of consumption use cases by dApps in gaming and all these things built upon this like underlying yield resource.
Hey everyone, my name is Munam Wasi. I'm currently the head of ecosystem over at Morph. Our chain's official tagline is that we're building out the consumer layer. We just went live on the 30th of October, so compared to these other chains, we're definitely far newer. But I think our unique positioning in the way that we think about the purpose of our chain, how we differentiate it, and how ultimately we operate and distribute our products and services is all through a consumerist lens. And so we've got a large emphasis on East meets West, West meets East, which is very sort of human-centric and practical about reaching users, as well as having a pretty aggressive future-looking roadmap towards payment-based experiences in particular, which is one of the bread and butters for crypto at large.
Yeah, thanks for all of the introduction. I would like to start the discussion focusing on like where we at. So let's start with current status of scaling. So how would you describe the current status of Ethereum scaling, and what do you consider the most notable developments in L2 over the past year? Yeah, shall we start from here?
Yep, sure. So for current status of the Ethereum scaling, we have rollups. So what we have seen is teams are now using Ethereum as a consensus or security layer. So most of the transactions and TVL, we see it being migrated to an L2, for example, DeFi or gaming. In terms of development, one of the most notable one and probably relevant for L2s is actually EIP 4844. So proto-dank sharing that allows us to actually have a different market. So instead of previously whereby we were paying gas fees in the form of call data when we settle transactions back to the L1, right now we can tap on blobs, which significantly reduce gas fees. So for some of the gas fees today, it's sub 1 cent. And we hope, with this, we can actually onboard more users into L2s as well.
Sure. So at Morph, I think one of our biggest areas of emphasis is on a decentralized sequencer network. That's particularly important to us because not only does that, I think, fit in with broader sort of decentralization ideals, but it's a great way to incentivize a brand new network with partners that you work with. You can give partners the ability to effectively, own and help manage a piece of the network itself in, turn for being a great partner for that network. And so to me, infrastructure is much more so than just singular technical applications. It's also how are those applied operationally and for business perspective. Outside of that, I think as like a trend, if we have to comment on a trend, I'm really a big fan of atomicity. I think atomicity is like a brand new paradigm that's just starting to see solutions out into the market. I think we're seeing the rise of things like super builders, which are a natural evolution from, like shared sequencer networks, etc. And I think that's really cool because now, projects have a wealth of options. A couple years ago, all you had was either Bitcoin or Ethereum and kind of nothing else, and you were stuck building clunky things. But now you can pick what stack, solution, data availability sources, etc. You want to build a great experience. So I like thinking about how do we use tech and how do we build a great experience outside of it.
Yeah, I'll add to all that's been said. I think other than blobs as part of Ethereum scalability, I think there's also the other area of restaking that has led to a whole new area called active validated services, AVS, which I think a lot of people look at it as like another source of yield, but actually in reality, it's also another way of think of it as off-chain computation with additional risk assumptions over restaking ETH. EigenDA is an example of an alternative DA solution, data availability solution from 4844 blobs, and it's purported to be even cheaper and also arguably more scalable because currently even blobs, even though it's not full today, in a bull market probably will get full, right? I think there'll be like just constantly growing numbers of roll-ups. But 4844 blobs, there's only space for 3 at any one point of time, right? So per block. So we anticipate a world where there will be like a completely we'll be flooded with a lot of different kinds of roll-ups, and yeah, that will be really important as well.
Sure. Maybe let's break down a little bit more into the two topics that you guys mentioned. So first one, maybe we can simply talking about restaking was covered in this discussion, and also you mentioned about sequencers. So let's break through from sequencer part. In your protocol, what are the status and to actually execute those sequencing network? I think all the protocols have different point of view how you guys are integrating those tech into your protocols. So can you simply break down how we can perceive about your development in terms of sequencing?
Okay, yeah. I could share a bit more about some of the work that's being done on the Arbitrum public chains. So for the sequencer side of things, we're working with some of the partners such as Espresso. I think they were on previously around research on decentralized sequencers. When it comes to validation of the Arbitrum public chains, right now it's a whitelisted set of actors, but moving forward with a Bull protocol, so it's bounded liquidity delay. Anyone can validate an Arbitrum public chain today. So if there's a malicious transactions, the honest party will stake their claim and they'll get into a fraud proving mechanism. So this is some of the stuff we're doing on both the sequencer piece as well as on the validation piece on Arbitrum.
I see. How about Mantle?
Mantle, we're still in the early stage of thinking about decentralized sequences. So currently it's still OP stack. So I think our current priorities are more roll-up maturity at this stage. So, proofing mechanisms is kind of important. And for us, looking at that, there are many options available. And even on that front, one can argue that base rollups completely then makes the question of the necessity of a decentralized sequencer even something that we need. So we're sort of very keen. We're in the market, looking for the best and that would be available. And I would say we keep our options open will be the best way forward. Yeah.
So at Morph, obviously as a brand new chain, we're trying to blaze our own path. So we're not using the OP stack or the Arbitrum Orbit stack, which are, the two most popular stacks in the world. We sort of have a custom stack actually built on top of the Scroll stack itself. But, from my lens and purview of ecosystem, just as, you mentioned that AVSs are thought of as sources of yield, I like to think operationally of sequencers and the opportunity to own a sequencer as an opportunity for margin. in the long tail of things, I think everyone expects a lot of crypto to move towards zero fee backends and zero fee front ends, just as things like atomicity and access to capital and usage becomes near zero. That's where actually owning a piece of a network and being partnered with like a blockchain that you're building on is a great way to align incentives and is a great way to actually, I think, derive economic value from your software and solution. So it's not enough to just think about the technology in a vacuum. Like, yes, that's there, and there's this whole research angle, and there are definitely a lot of teams pushing the envelope over there. But I think we also need to start thinking about what incentives are these, like sequencer paradigms creating, and what novel apps can be enabled because of it.
Yeah, I think he really mentioned a good point, like aligning incentives. So in terms of that, and in terms of restaking ecosystem, what are the points that you guys are focusing the most in terms of interacting with different participants in restaking ecosystem?
So for the restaking ecosystem, I think Arbitrum outside Ethereum, we have one of the largest LSD ecosystem. And then building on top of that as well, there are quite a number of LRT teams. On the AVS's side as well, there are teams that have leveraged the AVS to build out their own orbit chains. So essentially, you have some of these restake rollups that are building on Arbitrum, such as Dodo, for example. So increasingly, we see some dexes, as they get to a certain size, they don't want to compete for block space on a public chain. They feel they have their own set of user base. They might build their own restake rollups using AVSs to provide this sort of real yield to their end users.
Yeah, I think to answer the question is very that's a very good question, because once one of the biggest debates in AVS market and is what's the great use case that AVS can do that is not extractive to Ethereum's use cases, right? And I think one of them that I've found, and I've been on multiple panels on because of that, is pre-confirmations. So pre-confirmations are these L1 soft guarantees. Okay, I'm supposed to put it in consumer language. It's like if you let's say you want to pay for your coffee, but you don't want to wait 12 seconds for the Ethereum L1 block to confirm anything, right? So you obviously you want your coffee in at least 1 second, because your Visa MasterCard is probably only processing in 1 second. So we'll never get Ethereum transactions if we don't have something shorter. Pre-confirmations is that soft guarantee where it's like it's only $5. We can live with it being a 1 second or 250 millisecond transaction, and in exchange you need to do something off chain to sort of like take that risk. And you can't do that on Ethereum because the asset itself is confirmed by 12 seconds. So then AVSs have a role to play, because it's like, hey, finally there's a use case that's kind of like off-chain, but still uses the crypto economic capital of Ethereum to be challenged. And I think more and more we might find these use cases. And that use cases are very aligned to enabling good UX for L1s. It's beyond even the L2s. So that perfect marriage of incentives and alignment is an example.
I think this is also a place where looking beyond just fully like decentralized infrastructure and also looking at what is available to us with like centralized applications is really, really, really key to give people that blended experience. Obviously, in a perfectly ideal world, people are just using decentralized applications to begin with. But as we're building towards that world, I think really thinking about, these centralized exchange front ends that offer on-ramps, off-ramps, like in the native languages and contexts of different countries and their sort of regulations and their payment infrastructure networks that already exist is a huge place to think about where incentives should be applied. I mean, we're all building chains for the whole world, but I don't know how many of us have like language coverage to the hundreds of languages spoken throughout the world. But if you're able to partner with like local Web2 infrastructure as well, and actually take advantage on the back end of things, whether it's a decentralized sequencer network where you can earn rewards from, or something like an AVS where you're able to tap into more liquidity and economic security, you're able to deliver to people a great experience. So incentives aren't just like, how do we make people feel good about making money off of this together. It's also, how do we think about portraying these to the end user? Because the end user doesn't care. They don't want to wait 12 minutes to find out if they can buy coffee or not.
Yeah, I think you guys really point out a good part, because to explain more about my background, I was also working in like infrastructure focused project, and I moved to VC, a market maker, which means these days I'm also thinking more about like incentives and like the market price itself. It's hard to focus on like which kind of infrastructure you guys are strongly building on and what I really need to care. But what I understood from this conversation is that you guys are focusing on solving the problem, and that kind of solution eventually helps people to engage with more better incentives and better alignments. So yeah, I'm excited to move to the next topic to better understand all the ecosystem. So today we are having like 4 projects. I think we only have 3 projects right now, but there are like 2 approaches in terms of solving the scalability issues. And in terms of like choosing optimistic rollup and ZK rollup approach, I want to know more about your perspective on the strengths and weakness of these approaches. So could you guys share more about the technology you guys are focusing on and what are the strengths of deploying those kind of approaches?
Yeah, for sure. So one question I get quite a bit is, hey, you guys are building like Arbitrum, why you call like Offchain Labs? So maybe it's helpful to share a bit of background as well. So the founder of Arbitrum or Offchain Labs is Steven. So Steven has a background in cryptography, so does our chief scientist Ed. But our approach towards scaling is picking the right technology that best scales blockchain. And what we have found through our research team is at this present moment, optimistic rollups is the way to go in terms of cost. So when you talk about cost, the cost of an honest party in an optimistic rollup system is always 0. Whereas for a ZK system, there are trade-offs, such as paying some of these ZK approvers, and these costs actually adds up, especially at scale. The second point is some of the other work or products that we have launched. So we have launched Stylus. Stylus enables developers to build in other programming languages. So like Rust, C, C++. This compiles down into WebAssembly and eventually EVM bytecode. So what this means is, if you're a developer today and you want to build in the EVM ecosystem, Solidity is the only way to go. But with Stylus, you can use existing programming stack to deploy an Arbitrum. And this is only possible because we have an optimistic rollup that leverages our fraud proving mechanism. And based on our research team understanding, it'll be difficult to implement Stylus if the underlying infra was ZK. But with Stylus, you can actually implement some of these cryptography packages on the application layer. So this is something that we've been excited, and we have also seen teams building, ZK dark pools on Arbitrum.
At Morph, we're working towards building out a like ZK VM, and we're sort of in the final stages of testing that out and going for full deployment. And we're working with like great partners like Succinct Labs, product SP1 in order to make this happen. I think the thing about this is that even within these 2 categories, not all ZK VMs are the same. There's type 1, type 2, type 3, type 4, which in sort of plain English are basically like how close to normal Ethereum are they? So there are like a wealth of solutions out over here that aren't fully compatible. If you look at, how some chains define themselves, they define themselves as like bytecode compatible, because that's like another area of consideration over here. I know all of these things are obviously trade-offs about using ZK VMs, but our end goal within our chain is that I think in order to fully accomplish our universal consumer vision that we have, we feel that zero knowledge-based paradigm is the right way to not only achieve that technically, but also to tell the story of why we do what we do.
Well, I'll start by saying that this is a very biased question because 3 of us here are optimistic.
Yeah, I
And one is working on ZK. So I will take a very neutral position.
Okay.
And not try to like show my architecture. I think on balance, optimistic, and this is already something like Vitalik has covered even before rollups were a thing. He already anticipated this, which has come to play. He thought about it in a way where I think optimistic rollups are probably like easier to deploy. That's one issue, one point. When he talks about it more expensive, it's because the computation for proving is really high. So when a ZK proof has this concept of a prover node, and these prover nodes, you can imagine some kind of a very large GPU, right? Like minimum spec is like your latest grade Nvidia thing. Okay, so like but then it creates this really beautiful. That's why it's like they call it succinct, like really small proofs on that, and that process, you can imagine like some concept of Moore's law goes over time. Nvidia is going to make a better machine. It's going to be smaller. Eventually, the power of that huge thing you see is going to be the same power as some phone in the future in 2030, right? So I think it's just a matter of like time and timing and execution that are trade-offs. So it's just a question of like, are you gonna get in early, all right, or are you gonna grab users? And should you be too concerned about these GPUs, or should you be more concerned about something else? Like it's just a prioritization question among each of us, I believe. And on balance, the best value that ZK provides is really the strong finality guarantee that optimistic rollups would have this challenge period. So on balance, I think that's a really very powerful primitive. You can imagine like a institutional capital will not want withdraw your 1 billion ETH, 1 billion TVL of ETH and I need to wait 7 days, right? Like that, the cost of capital is really high, right? So you cannot imagine a world where truly financial institutions, truly like the rest of the world and capital of the world will want a value of challenge periods. So it's just a matter of time and opportunity and where everything fits.
Yeah, so between ZK and optimistic rollup, I really like how you approach and how you explain to like those easier terms. And I think it's a perfect timing to also listen about how Manta's approach in terms of those different like scalability solutions in terms of ZK versus like optimistic, and what are your strengths in terms of tech perspective.
Got it. So, by the way, sorry everyone, I got a bit late because of the traffic. But yeah, so just to give you my introduction, so I'm the head of ecosystem at Manta. Now coming to the question, so I might be biased on the optimistic side because like we are an optimism chain, but I don't really like crib about the ZK technology as well, because I still trust the technology. I still the like off verifying all these data and stuff. I really trust that. But the reason why Manta started with optimism was because we wanted to focus on the lower gas fee, which we wanted to do. So for that, the first step which we took was about the gas gain program, where all the transactions which are done in first 60 periods and like every 60 days period, so 50% of that gas fee is returned to the user. So say suppose if you do like any number of transactions right now and you pay around $10,000 or $1,000 as a gas fee, so 50% of that gas fee will be refunded to you after 60 days. That was the first thing. Second, back in December when Celestia got live, so we were the first chain who got modular with the help of that. So we are one of the largest on them as well right now. Apart from that, the reason why we started. So just to take an example right now from a chain perspective and a user perspective. So initially, for an example, if we were paying for each transaction $1 as a gas fee, because of Celestia, the gas fee was reduced to 0.02. So that was how beautiful it was. It was dropped by 98%. And even if you see all the recent data, so you can't even calculate Manta's gas fee because it's so cheap. Like it's around 0.3 times 0.1. So that is the normal medium gas fee. And if you can wait for like more than 15 seconds so on MetaMask, so you can just remove that one as well. That is the how cheapest we wanted to work on. That was the reason we started using optimistic, because if we shift to ZK, so it will be computation power. It will require more gas fee for the validators and everything. So that was the reason we didn't want to do that. And right now, the major focus is to not just use Celestia, but use other DAs as well, 6 DAs at the same time. And whichever provides the better results, we can just use them. So right now, if we are 5 people, so say suppose we are each and everyone is a DA. If I'm the base DA for Manta network, and right now my gas fee is a bit high, the computation power or the block space is quite slow. So governance model can shift the base layer to you or maybe you, and then we can just sequence it. So in case in future, if you go, like your network goes down, still we have 5 different places where you can call data. And that's how like we are trying to scale this up for the low gas fee, because right now the major problem, like anyways, we are from EVM ecosystem, and right now the major competitor for the gaming ecosystem is Ton. And if we want to fight together for them, so we need to do all these things so that eventually that Ton users, the Telegram users, come to EVM, and then it's okay if it goes to any of these chains.
There's, I think, two things I want to touch on super quickly. To Bella's point earlier about thinking about the timing of all of these things, I think it's not a good idea to think about these things as just like singular decisions that you can never move away from. You know, all of these paradigms shift over time. I mean, if there is a Moore's law breakthrough, I assume that actually all chains will become zkVM chains just because that makes the most economical and performance sense. But at the same time, I definitely see a world in which, you know, also like being optimistic becomes even cheaper or even better. And so these are things that should be fluid and dynamic, and they should be thought of in trade-offs, not in terms of like what technology is enabling, but what story you want to tell with it. My bias on ecosystem is always thinking about like, what does this enable your partners to tell their end customers whenever they inquire about the technology? And then to your point about thinking about Ton and sort of other ecosystems that are, I guess, challenger ecosystems to all of us, just as a like point of order, anybody can build a Telegram Ton application and deploy it to any chain. So the Telegram mini app doesn't actually only have to be for the Ton blockchain. You can deploy it for your own. If I can chill for 30 seconds, we are coming out with a toolkit called Morph Connect, where it's like an easy SDK for building out Telegram mini apps specifically to deploy onto Morph. And see, like that's another way where it's not really a technological unlock that like influence our decision making. It's just the fact that Telegram now has over 1 billion users. I think it's the world's 6th biggest, most popular app of all time. And a lot of teams like building from it in places that conventional crypto teams don't hail from.
Yeah, thank you. I guess like my first primary, like the goal of having this kind of discussion was to understand why there are so many L2s. And I was also questioning about, I thought L2 ecosystem is so competitive. Like I was wondering how you guys are approaching with each different perspective, but I really like what he mentioned previously. And to move on to the next point, I want to touch on some interoperability. So I guess defining interoperability here, like it could be interoperability between L1 and L2s, and interoperability among rollups, or even we can bring L3 here. And regarding those interoperabilities, how are current L2 solutions addressing cross-layer communication? So I think this is the last part we are covering in terms of tech perspective. So I just want to hear more about how you guys are defining and solving this kind of issues.
Yeah, so with Arbitrum, we're one of the teams that enables you to build your own chain with the Orbit stack. You can decide if you want to settle to Ethereum, be an L2, or if you want to be an L3, settle to Arbitrum base. There are teams that settle on Bitcoin L2s, there are team settling onto Ton. So what we have done in terms of interoperability is with the Orbit SDK, you can actually launch L1 to L2 bridging right out of the box. And we have L1 to L3 bridging as well. What our research team has done is come up with a concept called chain clusters. So essentially a few set of chains with similar validator set or similar consensus mechanism can decide to trust one another to enable fast withdrawals. So we recently launched that last week. It's called fast withdrawals for Orbit chains. This is only applicable if you use like an AnyTrust DA. So AnyTrust DA is one whereby you customize your own set of DAs with the Orbit chain. And we are able to reduce the withdrawal times from the 7 days challenge period down to 15 minutes. So this is what we're doing on the interop side. We're also working with fast bridges as well, besides our own canonical bridge. So working with fast bridges, some of the top guys like Layer Zero, Exla, Chainlink to enable interoperability solutions for teams that require interop between other L2s or even L1s.
Yeah, so on that question, I think interoperability is just not only the infrastructure side of things, it's also the tooling. So of course, to directly answer your question, bridging is also like cross-chain communication, different ways we're doing it. So currently, OPSEC has a standard roll-up bridge that's like the 7 days challenge period type. We also working with other types of partners like Layer Zero. So some of our top tier assets that we really want to use, like MEF and all that, have alternative cross-chain messaging protocol to work with. And earlier when I talk about tooling, that's when we're looking at things like chain abstraction, where then it's really like valuable. It's not just like, okay, improvements to how long you wait, but actually easy access to any kind of a call into any kind of ecosystem. I would say one of the challenges definitely for an L2 is that, it's almost like you have many different types of interoperability, mutually exclusive ecosystems. What I like about chain abstraction or intents is that they are very agnostic. They don't make a specific a requirement upon like where they need to be settled or which type of cross-chain communication method it needs to be done. So I think that type of abstraction, I like to say it's like think of it like the moment where state and religion was separated and there was huge productivity for humanity, right? This is I think, and like more attempts like this where we separate infrastructure from use case so that use cases can actually fly, right? So then we can be people that talk less about infrastructure, and maybe one day we don't have a panel. Like Vitalik likes to say this, I'll be controversial. He likes to say this, like if it's solved, if let's say something is very important but it's already solved, let's say infrastructure, we don't need to have an infrastructure conference. So it's like oxygen is really important, but nobody has an oxygen conference. Right? He did this joke, and I thought it was quite funny. It was like, yeah, maybe one day I won't be on conferences, but maybe I'll be talking about like more UX stuff.
To sort of build on top of this from that lens of the UX, I think we're at a very interesting time right now because there's a lot of people having L2 fatigue. I say this as an L2 that went live basically 2 weeks ago. There's a lot of people that claim to have infrastructure fatigue, but I think the nice thing is that we're sort of on the precipice of choice of chain and choice of infrastructure not really mattering. And I think, on the back end, on the front end, one of the underappreciated facts is now we've all kind of sort of coalesced on what interfaces people like. There's a reason why every trading app looks like Uniswap. And, maybe that's because we've all gotten used to it, or maybe because they've hit onto what the most optimal design language is. That's for someone else, who's a better designer than me to debate. But I think about this as actually a front end problem. This is only an issue if you're an application or an experience that is currently technologically limited by your decisions and that you have to make, extremely negative trade-offs for users. When we think about end users, like users don't really like change. That's why, particularly in crypto, there's huge customer acquisition costs. There's a reason why people are willing to pay really high fees, like within wallets, et cetera, to do swaps instead of going to the cheapest, most brand new, highest liquidity bridge that exists on chain because it's right there. So I really view this as a question to be answered more by like your front end design team, making sure that you're tapping into the paradigms that people like and you're providing enough value for someone to accept your trade-offs and stick around and keep using you.
Yep. So I think so like from my side, so I have a same opinion, but trust me, like I'm better like a Solana user than if it comes to UX side. So It's more easier for me to use them. It's more convenient. But coming to interoperable side, so like Manta initially started when the all the SL3 ecosystem were booming up. We tried to sort it out through different L3s on specific categories. So it can be a L3 specific for the security, which will be used for DeFi, a gaming, which will be a cheap and scalable chain, and there can be some social fi and deep in projects as well. Now coming to deep in specifically, so the UX problem is really difficult. I'm not sure how many of you guys have tried to use deep in or maybe node opera, like trying to run nodes. So it's not really friendly. You don't see the sign up buttons, you don't see anything, and it's very difficult to run a node for a normal user. That was what we were trying to solve it out initially, so that the Bitcoin miners and everything can be sorted out with just phones. But that's not the case right now, even if the Deepin was the 2024's narrative initially. Now coming to like our interoperability services, so usually like Manta has its own bridge to connect to all the EVM and SVM chains as well, like recent chains like Eclipse, Soon, and everything. Apart from that, we also have a Cosmos bridge, because initially like Celestia was the only one who started with Manta, and the native liquidity of TR token is just on Manta network right now. And third, which is about the IBC chain, interchain, which is also live on Manta. So that's how like we have connected all the ecosystem. But the problem over here is, if I'm using an EVM ecosystem and I have my all the funds in EVM, so that's not, it doesn't really matter for me to like jump from one chain to another, even because the UI UX is really good. It's because I am convenient over here. I know this ecosystem. I'll just stick over here. So it's more about how much familiar you are, how much good experience you have with that particular chain. And even if the DEX, which is not really cool but has a liquidity, I'll still use that.
Yeah, thank you. So, wrapping up the conversation, I would like to ask you about one important keyword you guys want to focus on next year. So, we looked over through how we developed in terms of this ecosystem, focusing on L2s and all those technical difficulties and solutions. So, can you just drop me simplest one keyword that you would like to focus on next year, or yeah, in the future?
So maybe 2 words: developer experience. So I think we want to continue building out the best tools as well as experience for developers to deploy apps or spin up their own chain within the Arbitrum ecosystem.
Quite tough, but I would say standards for all interoperability stacks. I think currently it feels very like zero-sum game. You have many different types of like egg layer, superchain, and many different types. I think the area that I'm really hoping that we will achieve is that instead of seeing it as clusters, to see it as a united front, right? And the reason I say this is because Ethereum should, maybe the word should be unity. Ethereum should be united completely and not fragmented. And we need to prove ourselves on this because if not, we're not fighting. It's like the allies. We initially we let Belgium lose, and then we let France lose, and then like all the Nazis were just like invaded all of us, and then we figured out, oh shit, we actually need to like be allies, and like the Americans, the British all went on Normandy Bridge together and to fight the centralized like S player in our ecosystem. Yeah, right. So I think we need that, right? This is like a critical moment because as we go into a bull market, right, who is going to outperform will be where all retail goes. And if retail goes to where things are not decentralized, then this is another like Terra Luna occasion that is going to happen, right? When this bull market ends. So I think it's upon us that we see the mission bigger, the pie bigger, and not just the slice.
For me, it's obviously the word consumer. Morph's tagline is that we're building out the consumer layer. And in hindsight, a lot of the things around, connecting with consumers better aren't really that profound, but they should be table stakes. Most projects and crypto projects have like very well developed Twitter and Telegram and Discord audiences. But do you have like a WeChat account? Do you have a Line account? Are you using African social media? If you're not speaking the languages that people are using, how are you bridging a technical and metaphorical divide with them? And it's also this lens of like, what story are we telling to people? We've seen this when actually Web 2 companies or sort of Web 2 first experiences have dabbled in crypto. Think about Reddit opening up their NFT product as digital collectibles. again, that's not exactly profound to call an NFT a digital collectible, but they went with that framing first and brought a lot of people onto there. Look at apps like Moonshot, etc., where a lot of people are trading memes as opposed to getting someone onto Pump.fun. That's a way of thinking about problem solving through the lens of storytelling, which is what I'm always biased about. And I think that's also the only way to actually stay competitive as a chain in a world in which it's becoming faster, cheaper, and almost quite literally one click to deploy a chain. The only way to stick around and avoid someone eating your lunch is if you can tell a really good story in the process. So consumer is the word to focus on.
From my side, it would be around modularity. All chains will be modular in future. So that is the major focus from our side as well, so that all the chains can be cheaper, scalable, even if they are a ZK or OP. And second thing, which is from my side, is about the chain abstraction, so that people don't really have to care about which chain they are using, which app they are using. They can use Moonshot on EVM as well then.
Yeah, thank you. Actually, the last question was not prepared. I just asked right now. So thank you for answering all those questions and really looking for the next development for all of these protocols here. Yeah, thank you so much for listening to our conversation.